Some services, including MyGov, are currently unavailable or experiencing slowness. The department is working on the issue and apologises for the inconvenience. So if you're out there taking advantage of Friday afternoon, lodging your tax return, you might be struggling. We'll see if we can get to the bottom of when that might come back online.
Hey guys, it's Osler from Down Under, and it's tax time! But we're not talking about that specifically. Today we're talking about 2 myths about the tax bracket and working multiple jobs. Both of these result in paying more tax, so we'll be trying to debunk these myths so you can have a good start to this financial year. Let's get right to it in... Alright, first myth, and I hear this quite a lot. Having more income means I have to pay more tax. It's simply not true, okay? I used to believe this too, until I actually sat down and read up on it. Come to think of it, I only listened to other people and never really took time to properly understand how it works. So I guess the lesson here is pick the people who you listen to. So, more income does not mean more tax. Let me explain. The Australian tax bracket has been around since 1915. For more than 100 years, income has been taxed in progressive rates, which makes one wonder, why do people still believe this myth? Here's the tax bracket for this financial year. So basically, as your income goes up, you move to the next tax bracket. You hit that like button and you get taxed accordingly. And if I remember correctly, a lot of misconceptions go like this. I'm getting paid $89,000 and getting taxed 32.5%, which works out to be around $28,925 and take home only $60,075. And if my income goes up to $91,000, I'll be taxed 37%, which means I'll be taxed $33,670 and my take home will be $57,330. Ah! So if this is true, you would actually be taking home less money if you increase your income. Doesn't make sense, right? This seems like the way people talk about their tax and how they calculate it, but it's wrong. So let's try to fix it. According to the tax bracket, your first $18,200 would be tax-free. Your next $18,201 to $37,000 would be taxed 19%, which is like 19 cents to the dollar. This would total to about $3,572, which is why it's included in the next tax bracket. Makes life a bit easier. Now your actual income bracket, in this case we have $89,000, is where people tend to make the most mistakes. They just see that 32.5 cents to the dollar and apply that to the whole $89,000, forgetting about the previous tax brackets. To try and fix this, your equation is going to be $89,000, which is your total income, minus $37,000, which is the maximum amount of the previous tax bracket, which would give you about $52,000. This is the amount that we take out 32.5% from, which will turn out to be about $16,900. Adding the previous bracket's tax of about $3,572 will add up to about $20,472. Way less than the previous $28,925. Oh, my head hurts. Too much math. Keep in mind though that we are not adding any other factors like the Medicare levy, which is about 2%, and we're not including any other deductibles. We're just doing this as a simplified way on how to calculate it. I'm not claiming to be an accountant or an expert on this subject, so don't take any of this as financial advice. Just a guy with a calculator. If your income goes up to $91,000, then you would pretty much calculate it the same way. Anything above $90,000 would be taxed 37%, which means that your $1,000 extra would be taxed 37%, which equals to $370. If you add the previous bracket's tax, you would get about $21,167 as your total tax. Compare that to your $33,670, that's a lot less. So if you have a chance to increase your income, don't let the next tax bracket stop you and hit that like button. Next is a question asked by my friend Dave. Why do people seem to pay more tax throughout the financial year when they're working multiple jobs? Or in some other cases, if they don't pay a higher tax, why do they incur a tax debt? Well, most of the time, this is because of the tax-free threshold of the first tax bracket. So the way the tax system works is that your income and your tax are calculated at the end of the financial year as a whole. This means that you should only choose one employer to claim your tax-free threshold from. And that is what you should do. Claim it from only one employer. Because if you do, you might be getting a higher tax percentage from the jobs that you don't claim it from, but that will avoid a deficit in your taxes, and at the end of the year, most of the time, you might get a tax refund. If you, however, claim your $18,200 tax-free from multiple employers, yes, you'll be getting a lot more money throughout the financial year, but you might be disappointed in knowing that instead of getting a tax refund at the end of the year, you'll actually be owing the government tax money and you have to pay them off. So before we collectively lose our minds on tax season, before we plan on buying that high value item with our hypothetical tax return, it's good to do a proper calculation. Even an estimate would do it in most situations, so that we don't have our hopes and dreams crushed when we couldn't buy that new phone, or buy that ticket to Paris, or whatever you were planning to buy. Have you lodged your taxes this year? Did you incur a tax debt, or did you get a tax refund? Last year, I think I got a $5 refund, so let me know in the comments what you think. I'd love to hear your thoughts. This is Osler from Down Under, and I'll see you in the next video. Oh, and shout out to Jamie for giving me this gauntlet for a birthday gift. Thank you.